Schuland Snorkel Cat. That's a fun name to say. Mayhem, Doji, Wood Chipper. You could be both. Hope you guys are doing well. Thanks for joining us this morning. Why do you join us in the morning? Well, you know why. Because we are the most stretched in terms of 6-month rolling average on momentum that we have been since October 27th. It just keeps burning higher, and people keep asking questions. How are the markets at all-time highs? They keep printing money. I don't know how else to really put it. They keep printing money. But when we get to these points where the markets do get a little stretched, where we are at the highest we have been in these rolling averages, that is where we can see profit taking. So I'm just going to tell you, don't be shocked if we see some profit taking in the next 2 days. The purpose of the market, of course, is to sell. And that's the key thing to keep in mind. December consumer prices came in at 2.6%, lower than expected. Money printer go Burr. We are at 70.28 right now. We'll talk about our top stocks. We'll talk about some screens. We'll look for some opportunities as we go. But there certainly is something eerie about the state of the market. It's very strange when we have green S&P 500, NASDAQ, Russell, all 11 sectors are firing on all cylinders, yet our intraday pressure is negative, and the FNGD, right, where are you, Secret Agent Charlie? It's still above its 20 and its 50-day EMA. So there still is some pressure on the Magnificent Seven. But across the other side of the market, the Russell 2663, silver keeps melting higher, 87 now, gold at 46.20, and people keep saying, how does the metals keep going up the way that they are? They keep printing money. We are at the peak of our liquidity cycle. We are at the point where rampant speculation in commodities is the norm in a cycle. 87.47. Again, we keep telling you, get your fingers in the dirt. Buy the things that matter. Buy the assets that matter. All roads continue to point to more monetary inflation. S&P 500 green, Russell green, NASDAQ green. Everything is holding well above its key moving averages. And, of course, always keep an eye on the SPXL. That's the leveraged ETF for the S&P 500. Just to break this down for you a little bit, to give away some of the secrets. If momentum is positive, the S&P 500, the SPXL, is most likely above all key moving averages. 2058, 100. It is just a slow burn higher. Don't fight the Fed. Don't fight the market. Don't fight momentum. We continue to rise. We wait until we hit March, and that is where there could be some fireworks, because that's when money starts to leave the money market, starts to leave the banking system in order to pay taxes. But for right now, don't be shocked if we're at 7,200 in the next 3.5 weeks. Just saying. All right. What are we looking at today? Well, look at me. Wow. New formats. Look at how clean this is, except for the multiple dots, and that's not good at all. Let's fix that. Key things today. The tape's being really shaped by 4 macro forces: CPI and rate expectations locking in markets in place. What do we mean by that? Well, we go to CME Fed Watch. We have the 2.6 move on CPI. And what we see right now is for January, no chance that we are going to be cutting. No chance. That meeting is coming up in 2 weeks. The market just does not expect the Fed to move on rates. Now out to March, the odds of a rate cut continue to decline as well. And it's been interesting. The people that I listen to who are like the hardcore economists, again, I don't care about rate cuts. I really don't. I think it's just noise at this point because of the way that we drive the market higher through issuance and treasuries. this doesn't really matter. But the hardcore people, the guys like James Bianco, James was out like a month ago and said they're not going to cut rates. And like, I just want to point this out. The S&P 500 is at all-time highs. The odds of a rate cut have dropped precipitously. Precipitously. I just learned that word on a Snapple cap. What does it mean? Precipitous. Something extremely steep, like a cliff. Something happening very suddenly, rapidly, and often dangerously. I didn't just learn that. I just learned what it meant. So, hey, look at me improving myself on a Tuesday morning. We're at an all-time high on the S&P 500, and yet the odds of a rate cut continue to drop. Do you see the disconnect? Do you see that this is not what matters? We go out to September. They're still predicting rate cuts, by the way, which is hilarious. If we don't get a cut by March, we're not getting a cut by June. And then we start to actually focus on the backside. There's no way they cut rates if they are printing money. It's just not going to happen. And they know it, and you know it. And the reality is, we all know it together. Yet we don't talk about it. It's like the family member who owes you money. You don't bring it up. So the key thing to keep in mind here is what matters. What is actually driving this market? Money printing, treasury issuance, Japan. The ECB is bailing out its shadow banking system very quietly. Nobody's talking about that. So all systems go, and that's how you end up with higher highs and higher lows. And that's kind of what we're looking for. We're looking for an occasional move back to the 50-day EMA on the SPY or the SPX or the SPXL. An occasional move back down to this level. Maybe we hit 680. Cool. Buy the dip. Buy it through March. And then be willing to hand it off to somebody else who is way too optimistic about the rest of this year. Geopolitical escalation driving energy higher. Yeah, a lot of chatter about Venezuela. A lot of focus on what's going on with Iran right now. Not good. What's happening between Russia and Ukraine. The yen, and this is what I'm looking forward to today. I have to ask the chat. I need you to ask him. I need Blake to talk about the yen today. Blake knows FX better than anybody here. I'm very interested in what his take is when it comes to currencies, because this is a mess. The yen just continues to burn lower. And again, this goes back to the fact that, yes, they did print money. They did announce $117 billion in stimulus back in November. But this is very problematic. And we go back to the capital wars concept, the idea of the weaponization of the yen. How intentional is this? And what are they doing at a time that China is trying to improve her currency? When the yen weakens, it puts pressure on China because Japan and China are both exporting nations. So this seems intentional. It's helping the dollar. It's hurting Japan. But meanwhile, what should you be watching? Look at names like Honda. If Honda starts to break out here, and again, you see that crossover on that 820 right now, 34, maybe 35. I really like Honda as a put spread stock. I like to sell puts on this company. So what do I do here? I'm looking out maybe 2-3 months. And what I'm doing with HMC, I'm actually willing to perpetually own Honda. Like, it's one of those names. Now, spoiler alert, I drive an HRV. I'm going to drive this thing into the ground. It's the dumbest car in the world. I call it the gray shadow. March 20th. No, April? Man, this options chain stinks. How far out can I go? Oh, man. This is very illiquid. I did not know that. Huh. Oh, well. I'm just going to buy the stock today, and I'm going to hold it right at that EMA 50. See it 30.26? That's my stop. That's literally my stop. And if we can break above that 100-day, 33, maybe 34. So Honda, I'm on board. Gray shadow. Mega caps are dictating index direction. Yes, we saw that with the FNGD. All right, so food, energy, basics. I haven't had a chance to go through this report. Usually I do a pretty good job at checking it out. This morning I was chasing my dogs around the outside in my yard. Person who came over yesterday to do some work at my house left the gate open. So I now know what the woods look like in my new property. But CPI, what matters? It just comes down to the headline number, 2.6%. My overall expectations with this are basically you can't put a ton of expectations into the consumer numbers. The thing that matters most is that most cycles like we're in right now end with Fed raising rates. The cycle ends, the liquidity cycle ends with rates going up. I don't know when that's going to be. I would say probably end of year. At some point, they're going to have to hike. Okay, what does that look like? It just means a 25 basis point increase, and it's going to be very sudden, and that's going to be the end. This happened in 2021, 18, happened in 14. They'll have to hike because they'll have made a mistake like they always do. They're always behind. So what does this mean? It just means that you have to be patient. There's going to be a surprise CPI at some point this year. And they might have to hike. Or what's worse, they just keep rates at this level. And there is no cut this year. And that throws people off. And that is how the cycle ends. And then 26, 27, when you get into the refinancing that is necessary heading forward, the market takes that on the chin. I think that's September of this year. But right now, got to let this burn higher. All right, Black Sea tankers hit. You know, I've had conversations with my best friend is one of my two best friends is at one point he had more oil under contract than anybody else in the world. He knows the oil market better than anybody I've ever met. So when I talk to him and he can't make sense of what's going on, that's where I have a little bit of concern. The energy market right now is very odd. Crude is at 65 on the Brent side, WTI at 60.50. And, you know, we're all trying to make sense of what's going on with Venezuela. But the real story is Chinese demand. Chinese demand is what contains that last barrel demand. And the expectation is twofold. One, that we're going to see China print more money, which will cause gold, silver, platinum, copper, Brent, WTI, likely to move higher. But also what the relationship is going to look like with OPEC. And OPEC, if you don't know, OPEC is the production cartel of the world. It started with 5 countries. Now they added Russia in this OPEC plus component. They have not mentioned Venezuela at all, which is wild to me. But what matters? What matters is they're actually going to be expanding production on the edges. They are going to start testing their production, everybody's production, to see what their spare capacity will look like in the next 2 to 3 years. And then they'll reset, and then they will set hard caps on how much each country can produce. And they're doing so under the expectation that crude prices are going to go up. Now, I'm just going to tell you, this is not a statement about politics. It's not a statement about any. I don't trust Goldman. I don't trust JPMorgan. I listen to what OPEC says because they're the ones pulling the oil out of the ground. OPEC is expecting higher prices. The banks are expecting lower prices. And the story that I always tell, when I was 26 years old, my friend calls me, he said, we're going out tonight. I said, sounds fantastic. We're in New York. We go to this dinner, and it's him. He had worked at Goldman, and he had 2 guys with him. Both of these guys were oil traders that were not Goldman affiliated oil traders, but there was a Chinese wall, right? The idea that we're not going to really know what they're doing, but we know what they're doing. It's all nonsense. It's all smoke and mirrors. But I said to them, you know, guys, it's really wild because this is 2008. I said, I saw that you guys put out a report at Goldman that oil prices are going to 190. And both of them laughed, and they said, oil's going to 40. They were shorting, and they were right, by the way. Oil did go to 40 in 2008. So I don't trust the public figure. I don't trust whatever comes out of the research. Instead, I focus on what are the people that are actually producing this doing, because these are sovereign nations that need higher oil prices. Once again, crude, I'm going to let it roll. But on the other side of this, I just want to remind you of this. There's always money in the midstream. There's always money in companies like Energy Transfer, Enterprise Product Partners. These are the names that are going to pay you 7-8% annually. And then this is the cash that you take that is kicked off as shareholders, and then you could speculate with this money. ET, great name. All right, it's 9 o'clock. That means Secret Agent Charlie is, yeah, see, you guys are calling for it. I'll give you the last 2 stories in a moment. Let's talk about, I love this company. I don't even know what they do, but I love this company. Weibo, buying the $11 call for February. Like, we're good. China is printing money, and Alibaba and Weibo and CWeb. Look, you know Gianni's excited about it. Gianni's been rolling hard with the Chinese stocks. He's very bullish on China. I'm right there with you. Weibo, what do we do? This is, it's so good. It's so good because what happens when you see a name like this and you know what the underlying economic setup is, it just gives me pure conviction. I have conviction. I want to buy this. I want to make this trade. I'm excited about it. I want that $10 call for February 20th. And I'm hoping that I can pull it somewhere around $1.30 if I can get it. And then, yeah, that's tough. But here's a really simple thing to do. Sell the $12.50 as well. So if you can buy that 10 and you could sell that $12.50 for February, and you can get that somewhere around $1.25, that means your break even is going to be $11.25. You know, you might have to wait. This could pull back a little bit. You might need to be a little patient with it. If you want to go out further, I'm just going to point this out. April is an option as well, the April 10 and the 12.50 for April. Here's the issue. You're going to want to dump this by early February. You're going to want to look for momentum to return. The only issue is that when you're in this kind of longer period of time that you have to address, then it's not going to be as violent of a move. But I just like the way that this is setting up. So April 17th, $10 call. It's actually cleaner. You sell the 1250. Your probability of profit is 45%. Your max return on risk is 113 now. I doubt you're going to get there. I'm looking for a move to 12. If I can get to 12 by maybe February 9th, it's about a 35% gain. And I'm just going to say, I have conviction in Weibo because of China's monetary policy. Momentum is strong. If you don't have conviction on this, then maybe you wait until see if we have a pullback to the 8-day moving average. Maybe wait into today because you can already see there's some pressure on the stock this morning, down 1.7%. Buy it at 10 o'clock. Okay? All right. Good talk, everybody. WYFI. I don't know what that is. The Wi-Fi. You got the internets on computers. White fiber. Recent IPO. And we have a rule here. The rule is company goes public and it screams higher and it inevitably sells off. You don't buy it until it gets back to its IPO price. Well, good news, everybody. Here we are. 1886. Got that nice little crossover here. We need to clear that 1941, but you buy it here. You set your stop, 1758. That's it. Be willing to lose $1 to potentially make 5. White fiber. Don't know what you do, but it's a great looking chart. NBIS. Nebius Group. A lot of insider buyings come through on this stock. We've seen this recently. I hate technology software infrastructure. It bothers me. But the momentum is here. Crossover is here. Your stop's back at $100. You're buying the stock. Not overbought, not overbought, not overbought. Strength on the MACD, which is what we're looking for. Continuation of trend on the tech side, particularly with tech turning positive. All right, I'm not shorting anything in this market right now. I really am not. But I will say, if you're looking for things that could potentially roll over pretty quickly, this is a Becker stock. Now, you guys don't know what a Becker stock is. Becker is a guy that I went to college with. I think he works for Maple Bear, but he's a guy who always buys at the peak. He always, and he'll text me and he'll say, why is this stock going down? I'm like, because you bought at the worst time possible. You literally bought when the stock was overbought. I think he probably bought the stock in August at like 55. All right, so you see Maple Bear peeling lower. And you had a bad time. You had a very bad time in October and November. If the continuation trend is there, what I'm doing is I'm looking at the 3-minute chart. Now, the thing about this is you got to be patient, but keep that 3-minute chart open. And you see that burn higher yesterday? What do you think I was doing right here? I was shorting. The second that 820 crossover happened on the 3-minute chart, that's the 24-minute and the 60-minute. You have a burn higher all day, and then what happens? The funds start to take their profits, and it becomes a violent multi-candle move lower. And you can do a lot with $1, especially short duration, short term. So I want you to be looking out for this today. I want you to pull up your 3-minute chart, set up EMA, 8-minute, 24-minute, 60-minute. That is your 3-minute adjusted. And in the event that it pulls back, you take your shot. Look for that at the end of the day. That is kind of the market that we are in, where we just burn higher. And then in the last hour, profit-taking starts. ZS is on our list as well. Same story. Tech software. Ugh, yikes. I can't. Lower highs, lower lows. I think we can retest 180 on this name. Horribly unprofitable company. All right. Today's watch list. RXRX, BTBT, RXRX. Where are you, my friend? Pure momentum stock. Easy stock to trade, by the way. All right. So now that we're above that 100-day EMA, what do? Go out a week, go out 2 weeks, buy the 5, but keep your stop very tight. This thing will move very violently to the upside over that 100-day EMA. We'll see if we can get some continuation there. If you want to be a little bit more conservative, look at the 450 or the 4. But once again, you see the chart, you see the moving averages. It's a slave to its EMAs. It does a very good job at reflecting that momentum. And again, this is very closely tied to NVIDIA. So buy it, set a very tight stop. You could buy the stock at 488 and set a stop at like 480. And I know that you're sitting here going, well, Garrett, I think are you bullish on this or not? It doesn't matter. What matters is just follow the rules. Set a 2% stop, and if it breaks out, it breaks out, and if it breaks down, it breaks down. And you don't take it personally. But the momentum is here. We've bounced back from 4. We're at 487. It's a great stock to trade. It's a great stock to trade because it does a great job reflecting resistance, momentum. You see how right here it bounces off that 100-day and then pulled back a little bit? That's what equities do because, again, at the end of the day, this is an algorithmic run market. And we're nowhere close to overbought. We're nowhere close to overrun. And money wants to flow into risk assets like this in the environment we're in. So this is the opportunity. The opportunity is the stock goes to 680 in the next like 3.5 weeks, or it just goes to 480 and that you lose 8 cents. Do you understand my logic here? It's not personal. You're looking to take advantage of what the market is giving you. And RXRX is a great representation of momentum in the market. BTBT, well, I've taken a bath on this year. It's my worst call of the year. And the reason is I violated my own rules. I didn't pay attention when that 820 crossover happened. And that's on me. But we're waking back up again. Currently own this stock, but I'm selling the 350 call already. My break even is currently around $3.30. I'll let next Friday's option expire, and then I will sell out into February. Same level, $3.50, possibly $3, just to try to capture some of the gains. And if I can get my break even down to $3, I'm going to be happy because, once again, all roads point to more monetary inflation. And if that's the case, BTBT is going to be fine. Massive amounts of insider buying at $2 earlier last year. It is an Ethereum fund, and let's just point out once again that as China prints money, it is bullish for crypto. Last thing we're going to look at. Hey, all right. Got to read these notes. 8 days to cover on RXRX. I love it. Soon you will have Elon posters on the wall. Okay. We need to get Lars Moravia on the show. Got to call that guy. 215 on AMD, buying the 215 call and selling the 220. Go out 2 weeks. AMD is just burning. It's ready to burn. It's ready to roll. Momentum's back. AI trade. It's silly. Intel, once again, last one. I'm just going to remind you, I want to own Intel at $35. That takes me out to March, and I'm selling a put spread. And yes, I firmly believe that Intel will sell off. But I want to own it for less. This is like, I love that everybody just gave up on Intel. It was so blisteringly obvious that this was going to burn higher. All right. RJ in Texas is awake. Good morning, RJ. Thanks for joining us. You're a little late. It's okay. Walter's just trading the stock. That's smart on RXRX. That's a clean way to do it too, but set a tight stop. Reload at a later point. Okay. Yeah, Eric in Northport had some huge gains on BTBT this year. Right after that insider buying started, I think. All right. 3 minutes left. Real quick. I need Blake to tell me a little bit today about what's going on in the Bank of Japan. BOJ, more intervention is definitely possible. And if that's the case, Honda. Secondly, the mega cap is back. What is with the double? What is going on here? Trump pressures Microsoft over data center electricity costs. I'm going to point this out real quick. There is no solution to the electricity issue. And if you're going to focus on electricity, your back door is in natural gas. So please know that. Please know that there is literally money over in the corner on a name like Energy Transfer. Natural gas is going to be the backbone and the bridge for this for a while. All the nuclear talk, it ain't going to happen. But if you're looking for another trade, another idea, it's right here. It's this easy. The momentum is returning back to uranium at the moment. URA looks very good. Buying deep in the money. I'm saying buy like a $45 call out into like June of this year. You don't need to buy the shares. You could buy deep in the money, and that replicates the performance if the delta is high, if you're looking at like a 0.9 delta. If you do that, you can, $450, $500, $700 will replicate 100 shares, and then you don't have to put down $5,238. FXJ. You're talking about, I think you're talking about EWJ. Wait, what was that? Japan Value ETF? Man, they got an ETF for everything. Toyota, Mitsubishi, Sumitomo. There should just be a show where I mispronounce Japanese words. That'd be a great show. Sony, Mitsui, KDDI, Japan Tobacco. All right. EWJ looks good, by the way. Just slow burn higher. Look at that. Oof. 33% move this year. All right. So, real quick. Don's still got so much to say. Guys, it's 9:20. I hope you all have a wonderful trading day. Thank you so much for joining us. You could be doing so many other things at 8:45, but you joined me, and I really appreciate that. Don is coming up right now. He's going to put on some music that is not Jimmy Buffett, and then he's going to make fun of my haircut. I hope that everybody has a great trading day. I will be back at 3 o'clock to walk you through different trading strategies, different ideas. I hope you all have a wonderful day, as always, and I will catch up with you on the other side. Have a great day.
One, two, 1, 2,